Good morning, everybody. Mike Vaki, Princeton Trader, here with your Thursday morning pre-market webcast. Okay, daily chart. And, this is the week so far, you can call it opportunity lost because we come out of the lower band ride. The bulls get a nice push up, can't follow through the next day. And then the bears have what I would best describe a horrible Globex, an absolutely horrible Globex. When I talked to you guys for the evening webcast last night, I was saying, and it was true at the time, and it could still be, it's early, that for the first time in a very long time, the last 24 hours of price action, 24 hours back to, you could say 5, 6, 7 sessions since this failed, was truly indicative of potentially a down market. The only thing that ever stands between that being the case is the bears executing. They had a really good chance to execute last night. The trouble was they couldn't convert weekly pivot. They did about 3 washouts down below the weekly pivot, 2, 3, 4 handles, which was really sloppy. And then they took it higher. Right now we're trading 46. We traded as high as 46.75 in the Globex. But this is what we see from the bears. The opportunity slipped through their fingers. If that continues to happen, what do? Well, we get on the long train. If the bulls are able to convert the daily mid-band, that opens up a ton of upside. Just a ton of upside. They're going to have to deal with the monthly pivot up at 51.5. Here's your monthly pivot. Bears miss an opportunity. So they had to move down off the open. They came back, did a potential lower high, moved them back below weekly pivot, and then they got run. I mean, there's no other way to put it. So as they do that, and they lost the daily pivot at 44 and change, that sets up a date with the monthly pivot. They struggled there yesterday. They tried to convert it back on Tuesday, but they were unsuccessful in doing so. If they can convert the monthly pivot, then it sets up a move to 57, the area of the daily mid-band, and that's where the rubber really meets the road, intermediate term. What are we going to do for the fall? Do we want to remain below mid-band and trade between mid-band and lower band and stay in a sell rallies environment? Or are we going to convert the daily mid-band, make it support, and turn August, September into a buy the dips environment again? So that's all still on the table. Look, the bears can come back from this. They really can. All they've done, you had 3 looks over the course of about 5, 6 hours, actually 4 looks over the course of 5 or 6, 7, 8, 9 hours at 57.75. You're now, 47.75. You've traded 46.75 multiple times during Globex. So 48 remains a deal, 51 remains a deal, 54s. There's a lot of resistance up top. The bears need to start doing a much better job, though, of defending that resistance. And when they defend that resistance, they need to do a better job of not only making lower lows, but making shallower lower highs. Okay? If the bears are going to ultimately prevail today into tomorrow, then they need a big hard push down that's going to scare some people out of the water, get below weekly pivot, go engage around 24.30, something of that nature. Okay. Absent that, what they leave themselves open to is the drip higher. They leave themselves open on slow drips down being bought, because now the dip buyers are kind of getting their, they're getting their sea legs, and they're saying, okay, I remember how this works. We're going to be fine. We held weekly pivot again. Now we go to the next one, the next one, and the next one. So, like I prefaced all of this, the bears had a bad night. They had a bad night, and unless they come back quickly, they're really going to pay for it. All right, everybody have a good day. There will be a midday update out. I will talk to you then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.